Hello future millionaires and welcome back to my channel. I am Kayla.K.Keane and in this video I'll be telling you about the NCB's bond. Now the National Commercial Bank here in Jamaica is offering a bond, and if you are interested in diversifying your asset, then this video might be right for you. Click the bell, subscribe if you have not already done so, and keep watching. Welcome back future millionaires, and thank you so much for staying. Now I know that some of you are probably very excited now and thinking to yourself, this is something I might want to invest in, while some of you are not so sure because you're not so familiar with the financial infrastructure that are bonds. So firstly, let us look at the offer so that we can make an informed decision as to whether or not we want to invest, and then afterwards, I'm going to explain for my not so seasoned investors what bonds are so that you can know if it is right for you or not. Let's take a look at what the NCB has to say.
Let's build strong bonds. Let the NCB Financial Group Limited bond offer be your building block to start growing wealth. Earn up to 6% per annum on your investment with semi-annual interest payments. Minimum investment 100,000 Jamaican dollars. Offer closes September 9, 2021. Don't let this wealth building opportunity pass you by. To learn more, you may either speak to your wealth advisor, email multi-channel NCB Capital Markets at jncb.com or text BOND to 876-383-2076. Conditions apply.
Now that you understand the NCB's bond offer a little better, let us look at bonds in details and then we'll go back to dissect the specific offer. Now, while bonds are a very common type of investment, to many they remain a mystery. So let's look at what are bonds and how it might benefit your investment portfolio.
A bond is simply a loan given to a company or government by an investor. By issuing a bond, a company or government borrows money from investors, who in return are paid interest on the money they've loaned. Companies and governments issue bonds frequently to fund new projects or ongoing expenses. Some investors use bonds in hopes of preserving the money they have while also generating additional income. Bonds are often viewed as a less risky alternative to stocks and are sometimes used to diversify a portfolio. Consider this example. The city of Fairview wants to build a new baseball stadium, so it decides to issue bonds to raise money. Each bond is a loan for $1,000, which Fairview promises to pay back in 10 years. To make this loan more attractive to investors, Fairview agrees to pay an annual interest rate of 5%, which in the bond world is also known as a coupon rate. An investor buys the bond at face value for $1,000. Now, let's fast forward. Each year, the city of Fairview pays the investor $50. These regular interest rates continue for the length of the bond, which is 10 years. Once the bond reaches maturity, the investor redeems his bond, and Fairview returns his $1,000 principal investment. This bond was a good deal for both the city and our investor. Fairview got the money it needed to build the stadium. The investor received regular interest payments and the return of the original investment. Because a bond offers regularly scheduled payments and the return of invested principal, bonds are often viewed as a more predictable and stable form of investing.
I hope that explanation made things a little bit clearer for you, but I'm sure some of you are making the comparison in your minds about stocks and bonds. But what is the difference or similarity? Let's talk about that.
Compare regular payments of a bond to the experience of owning a stock. With stocks, profits and losses are driven by market forces and are generally less predictable. Of course, like any investment, bonds are not without risk. One risk that bond investors face is the possibility that the issuer defaults on paying back the principal. This is what is known as default risk. Typically, bonds with higher default risk also come with higher coupon rates. The amount of risk depends mostly on the financial stability of the issuer. For example, most governments are generally considered stable issuers and issue bonds with a relatively low coupon rate. Corporate bonds typically represent a greater risk of default, as companies can and do go bankrupt. That's why corporate bonds often offer a higher coupon rate. Several credit rating agencies assign rankings to different bonds. This can help bond investors to gauge the financial strength of the bond issuer. These ratings agencies often use different criteria for measuring risk. So, it's a good idea to compare ratings when considering a particular bond. And keep in mind, rating agencies aren't always accurate. So be sure to research a bond and its risks thoroughly before investing. Another risk to consider is interest rate risk. This is the risk that interest rates will go up, and any bonds you own will be worth less if sold before the maturity date. After all, when interest rates rise, more investors allocate their money into the new, higher interest rate bonds. If you wanted to unload a low interest rate bond to take advantage of these new rates, you would have to sell your bond at a discount to make it a worthwhile purchase for another investor. Capital preservation and income generation are just two ways bonds might be part of a diversified portfolio. Many investors use a mix of stocks and bonds to pursue their investment goals. And because bonds move differently from stocks, they can help increase or protect portfolio returns. Keep in mind that this discussion showed you one simplified way that investors might use bonds, and only a few of the risks to consider. Like all investments, bonds are complex and have a variety of uses and risks.
Bonds are usually sold on the premise that they are of lower risk than stocks, of course, but they do have risks associated with them, as you heard earlier. So it's important before investing in bonds to invest in your own financial education. So now that you are more informed about bonds, let's look back at the original NCB offer. So firstly, the minimum amount of money that you need to invest in this bond is 100,000 Jamaican dollars. It pays 6% per annum and it takes a period of 3 years to mature. Additionally, the offer closes on September 9, 2021, so that's the amount of time that you have to purchase. There are 5 important things that we need to look at though before we ever purchase a bond. So this will help to inform your decision as to whether or not this bond is right for you. Here are the 5 categories to look at before you purchase a bond. So one of the first things that you want to look at before you purchase bonds is diversification. Many persons purchase bonds to have a fixed source of income, so to speak, but it's always better to purchase it for the case of diversification. Now you want to purchase your asset in different asset classes, and buying bonds give you an opportunity to do so. Also, generally, it provides a lower risk than, say, stocks or other types of investment, which is one of the other great reasons that you should want to purchase bonds. Secondly, you need to do your homework. Never invest in anything that you do not understand. So until you understand what this specific investment is about, you should not be investing in it. Thirdly, you need to become au fait with your own risk tolerance. A licensed financial advisor would be really good at helping you assess this and understanding it. So this is something that you definitely need to know. Different bonds come with different risks like any other investment. So ensure that you know your own risk tolerance. Finally, do not reach for yields. A lot of time, bond investors try to get out of a lower yield bond to get into a higher yield bond without properly assessing the risk. Remember, once the interest rate is greater, it means that the risk has to be inversely proportionate, meaning greater interest, greater risk. So be very careful not to reach for yields, right? So that was my 2 cents on the new NCB bond offer. Remember to share the video with your friends, to like, comment, and subscribe. And most importantly, turn on the bell so you do not miss a notification when I upload a video. There are lots of other interesting content on my channel about finance and real estate, so don't go just yet. Here are other videos on the screen that you can watch.